Hi, and welcome to Smart Beach Investors weekly real estate update for Florida's Emerald Coast. This is where we take a look at the vital market statistics, looking for trends and anything that will tell us where prices are headed in the short term and even the long term. Then we offer a little bit of analysis that will help you determine whether you should buy, sell, or hold your property. All right? That's what we do. I'm John Moran. I am the CEO and founder of Keller Williams Realty's At the Beach team and Smart Beach Investor. And that's what we're going to do here. So let's go ahead and get started.
Let's talk about what's going on in the market this week as we get started with the whole new year. Boom, 2024 is starting off. And I think it's going to be a really, really interesting year. Matter of fact, it reminds me of a Mark Twain quote, because there's so much information out there, right? So this Mark Twain quote goes like this: "It ain't what you know that gets you into trouble. It's what you know for sure that just ain't so." And I think that is what our market is, right? There's so much talk about supply and demand and mortgage rates and their impact on all of this. And they all clearly have a really big impact, or at least we think they do, right? Okay, so what I'm getting at is I don't believe, after looking at the stats and whatever, I'm not so convinced anymore that supply and demand and mortgage rates are the driving factors in what happens with our real estate market. So let's take a look at what I'm talking about. I think you're going to agree with me in the end. All right, let's take a look. Let's talk about what we think we know first. Supply. Let's talk about supply. All right, the going theory is this: when supply goes up and buyers have a lot of options to choose from on what to buy, sellers should bring the prices down. All right, they're gonna have to get competitive price-wise terms, conditions, whatever, to attract the buyer because there's so many opportunities in competition. So when supply goes up, price should come down. All right. The other concept is this: mortgage rates. Mortgage rates. When mortgage rates go up, right, and it gets more expensive to buy real estate, then prices should come down because the affordability goes out, and for affordability to come back, prices have to come down. Okay, so when mortgage rates are high, prices should come down. And then the opposite is when mortgage rates come down, prices should go up, right? Okay, and that's why we're excited about 2024. There's a lot of talk about the mortgage rates are going to come down, which should be good and it should drive prices up, right? That's prevailing wisdom. Okay, when supply goes up, prices come down. When mortgage rates come down, prices should go up, and that's what we're hoping for in 2024. The prevailing wisdom. Let's see if that holds up to past scrutiny. All right, let's look here. Here's Destin Homes for sale, last 10 years. Okay, it's a good little sample group. So as you can see, it's been relatively flat for the last 10 years with the number, this is supply, with the number of homes for sale in Destin. Now that spiked in 2021, clearly. And so in 2021, you would think that the prices, because supply is up, prices should come down. And then the following years, 22 and 23, when the number of supply inventory dropped, the prices should go back up. So we should have a lowering of prices as supply went up in 21 and a increase in price as supply dropped in 22 and 23. Did that happen? Well, here's the sales. Here's the sales. Same 10-year period, same houses, same Destin area, right? Destin, Miramar Beach. Okay. And as you can see here, prices have gone up over the last 10 years. All right. A little slow at first, then it picked up some steam as money came into the market with COVID, and prices went up. Okay. You see the green on here? That's the mortgage rates. Okay. So in 2021, when we saw that inventory went up and spiked up, right? You would think that in 21, prices come down. It did not. Matter of fact, they didn't come down in 22. Maybe there was a lag. They did not. They went up. Contrary, right? So when supply went down, prices still went up. Now they came down in 2023, so maybe there was a long lag, Maybe that's what it is. Could be. And it took that long for prices to reflect. Maybe. But take a look at the mortgage rates, right? The green numbers too. The mortgage rates generally went down. They started at 4.17 in 14, and then they dropped. And then they kind of bounced around, but they dropped. And then they got really low in 2021. Okay, low rates should mean high prices. That worked out. And then high mortgage rates should mean lower prices. But look what happened in 2022 when the mortgage rates doubled, or almost doubled. Prices went up dramatically, right? And then when mortgage rates went up again to 7 in 2023, prices came down a little bit. So maybe the mortgage rates are working here. The prevailing wisdom of mortgage rates might be working here with Destin Homes, okay? And it's just on a lag. So this would tell us that perhaps with these rates being high, that prices are going to moderate. And if they come down, maybe the prices start to go up again. I can see that working here. Let's see, though, if it works against 30A or condos, Panama City houses and condos. We got that. Let's take a look. Here's Destin area condos. Number of listings, last 10 years. This is supply we're talking about. As you can see, it's pretty steady from 14 to even 2020, 2019 for sure. And then it takes a spike. This is the COVID impact, right? The people staying at home, cheap, easy money, all that stuff. And we saw a spike from 2020, 2021, where the inventory jumped up. This should indicate if supply goes up, prices should come down. We'll see if that happened. And then when inventory started to fall off in 22 and 23, that should indicate that prices go up. Did that happen with condos in the Destin area? Well, let's take a look. All right, here's the prices last 10 years for condos in Destin. When supply went up, did prices come down? And when supply went down, did prices go up? Same thing with mortgages. When mortgage rates went high, did prices come down? And when mortgage rates were low, did prices go up? Let's take a look at what happened with the condos in the Destin area. Remember, the green are the average mortgage rate for that year. And you can see it's been a steady incline in price. So in 20 and 21, inventory jumped, right? We saw in 20 and 21, inventory jumped. The prices went up. So even though inventory jumped and there was more opportunities for buyers to get different properties because there's more for sale, prices still went up, right? And they went up dramatically. Heck, they went from 355 in 2020 to over 500 in 2022, just 2 short years. All right, and they're still going up. Even though inventory has fallen off, their prices are still going up. So that's contrary. That's contrary to the prevailing wisdom. And then if you look at the mortgage rates, right, the green numbers, okay, 417 in 2014, then they dropped. So prices should go up. That stayed in place. But then in 2022, when mortgage rates went from 296 to 534, significant jump, prices still jumped. Matter of fact, they jumped more than they ever had. So mortgage rates didn't have impact. And then when they went to 7, prices still went up for Destin Condos. So both the supply increase did not cause prices to decrease, and the mortgage rate increase did not cause prices to decrease. That's interesting. Right? So you could argue with regard to Destin Condos, supply and mortgage rates don't have impact. Something else is impacting the price. We're going to talk about that. Let's take a look at 38 in Panama City, though, see if this holds true. Here's 38 homes for sale. Here you go. Number of inventory. What's happened over the last 10 years, starting in 2014 through this end of 2023. The trend line shows it's going up, right? It's pretty steady, stair step up from 14 to 19. A bit of a jump in 2020 and 2021, right? COVID years, okay? So supply jumped, and as we mentioned, prices should go down when supply goes up. And then as supply falls off, like it has in 22 and 23, prices should start to go up as buyers are fighting for fewer properties. Okay, let's keep looking here. Here's your prices. No, I see no drop in prices here. As a matter of fact, I see a pretty steep incline for houses on 38 year over year. Okay, and look at the mortgage rates, the green lines. All right, as mortgage rates jumped from 2021 to 2022, you would think that prices fell. They did not fall. They spiked. They went up. And then when mortgage rates jumped to 7 this year or last year, 2023, prices still went up. So again, this confirms that it's not mortgage rates and supply that has the biggest impact. It's something else. Here's 38 condos. Look at this. All right, a little bit of ups, a little bit of downs over the last 10 years. Spike in 21. Okay, that's what we expect. All right, 20 and 21, this spike, followed by 22 and 23, a fall off of supply. So again, if supply matters, you would expect prices to drop in 20 and 21. All right, let's see. No. Here's your prices. Sales prices for 38 condos over the last 10 years. That is a upward to the right trend line. Without doubt, okay? So as supply increased in 20 and 21, prices went with them. Contrary. And when supply dropped in 22 and 23, prices went up. Contrary, right? Mortgage rates, the green numbers, okay? Mortgage rates jumped from 21 to 22, from 296 to 534. Prices should go down. Did not. When mortgage rates jumped all the way to 7, prices should have went down. They did not. Okay, so that holds true, right? Mortgage rates and supply are not a massive factor on prices here at the beach. Something else is. Okay, how about Panama City? Let's look. Looking at Panama City houses, supply, last 10 years. Okay, pretty steady. A little bit of a trend line up and to the right, but pretty steady, a little up, a little down over the time, with a bit of a spike, not a huge spike, but some spike in 2022. And if there was going to be a price drop, that would be when it was. And maybe we see prices come back up in 2023 based on supply. Did that happen? Well, look, no, it didn't happen. Just like on 30A, houses and condos, and in Destin Condos, prices have increased regardless of supply, regardless of mortgage rates. Prices have increased in Panama City Beach for homes. Okay. Again, that takes out supply and mortgage rates as being the primary factor in price. Okay, how about condos? Same thing. Okay, condos, supply, up and down, generally up, but a little bit of a spike in 21 with a fall off in 22 and 23, just like we've seen. Impact in price? No. Prices are up and to the right. Matter of fact, they're steeply up and to the right over the last few years, regardless of supply and mortgage rates. Interesting. Why is that? Here's what I think it is. Security, financial security is the driver for prices and purchases and rentals, all that. Financial security. What do I mean by that? If someone is feeling confident that their job is going to hold up, they're not going to lose it. Matter of fact, they're going to get a raise or whatever. They're feeling good about their income stream. 2, if they're feeling wealthy because their house is going up in value like it has over the last few years, and they're feeling wealthy because they got a lot there. If their IRA, their 401k, their ETFs, all that stuff is going up, they feel rich, they feel wealthy, they'll buy stuff, right? If they have confidence in the economy that good things are coming, that the economy is not going to crash, and their wealth is going to continue to grow, and their job's going to be secure, and all this stuff, they'll buy everything. They don't care about the mortgage rate. They don't care about supply. I'm going to buy because I feel rich. I feel confident. I'm in it. I'll buy. I'll pay rent. I'll come on vacations. I don't care because I have a job. I'm getting a bonus. I'm doing all these things. My stocks are going up. Everything's working for me. I'm feeling good. So I'm going to buy. Okay? So it's that consumer confidence that you really want to watch as we move forward here. You know what I mean? In 2024, we're going to have to watch unemployment. Okay? Are people staying employed? Are they cashing paychecks? Right? And are the businesses going up in value because they are growing and they're profitable? Watch that. That's a big thing. 2, watch this. Supply chains. Okay? We got the Suez Canal's a problem right now. We got the Panama Canal's a problem right now. These shipping lanes are under stress. We have war in Israel. We have war in Ukraine. We have China, Taiwan. We have geopolitical things. That's supply chain stuff. And if supply chains get jacked up, businesses are not going to have anything to sell. They're going to have to lay people off, all that stuff. Watch that, okay? Third big thing is the Fed. We got to watch the Fed. The Fed wants to get inflation to 2%. And to do that, they're going to have to make sure people are unemployed. More people unemployed than there are now. Because when people are employed, they're cashing checks. When they're cashing checks, they're spending checks. There's too much money in the system. That's inflation. Too much money chasing too few goods and services causes prices to go up. Classic definition of inflation. And the Fed is bent. Jerome Powell is bent on getting more inflation under control. And that means increasing rates. Cool. Higher. The reason why rates are going up is because the economy is rolling. If the economy is rolling, people are making money. And people are making money, they're buying stuff. So, but if he gets his way, and he's a big elephant in the room on that. If he gets his way, you're going to see rates come down. And the reason why they're coming down is employment's up and productivity's down. Okay, that's their tool they use to cool off a hot market, is the rates. And they have to cool off a hot market if inflation is high. And we all have been hearing about inflation for a long time. So what to do? Here's the lighthouse in the storm. All right, here's what you do. 1, play the long game. All right, if you're in this, like we've always said, if you're in it for 5, 10, longer the better, 20 years, this is just a blip on your owning cycle, right? Just sit back and watch. You may see some buying opportunities, but I think you'll see overall prices continue to go up, all right? Over the long haul. In the short term, if you're a short-term player, you got a lot of competing forces. You got supply chains. You got the Fed. You got people doing great. You got all kinds of stuff going on. They're fighting. I think by the end of 2024, we're going to have a winner, or at least a general sense of who's winning and losing, all right? And I think the Fed is bent on getting inflation down. I think you're going to see unemployment come up, and you're going to see some softening of prices, even though we haven't seen it so far. I think that the lag effect is going to kick in. And in 2024, you might see some softening, some, not a ton, some. But I don't see any crash. I don't see how you can possibly have a crash. We had a crash, and that was the number of transactions. That was the sellers backing out, not selling at that price. The buyers backing out, not buying at that price. We had a crash in transactions. There's not going to be a crash in price. Maybe a softening. If you're a buyer, you should buy. If you're long term. If you're a flipper, well, who knows, right? That's all about timing. That's different. That's so short term. But if you're 5 years or less, I would sell as an owner. I would sell. Mitigate your risk. Just get rid of it because you can still sell high. So sell now. Call us. It's what we do. We help you max out your position as a owner, buyer, or seller. But short term, 5 years or less, run. Mitigate your risk. Always. If you're a long-term player, sit back. Right? Oh, this will be interesting. Let's watch this. Okay. If you want to find out where you're at, send us an email. info@smartbeachinvestor.com. That's what we do. We help you max out your position as buyers, owners, and sellers. We want max out stuff for you, especially here in 2024. Let's go get it.